Gold. The prices are going up. In India, we have some emotional attachment to gold, especially the ladies. Parents having girl child are worried a little bit when the gold prices are going up. It is customary in India to give gold as a present when their child is getting married. Have you ever thought of why the prices are going up, why it is fluctuating, why it is so volatile, and what factors decide the price in India? What is the difference between the international price and the Indian price? And how the retailer is fixing his prices? All these things we are going to answer here in detail. Before that, please subscribe to this channel so that you will get useful and informative videos like this. And whenever such videos are released, you will get notification and you can access easily to such videos. Why gold is so important? What are the reasons behind this? The first thing is it's a scarce resource. Its supply is limited. When supply is limited, then normally the prices are high. Now, if you want to mine gold, you have to spend more now because you have to go deeper and more cost is involved in this. And it is glittering and it is ductile and malleable, and jewelers love it because it is workable. Then it is non-reactive and non-toxic also. So many such advantages are there for gold. So this beautiful metal is having so much importance in the life of many people. Let us first examine how the prices are changing for the last 3 years. How the price is going up. What is the trend? Let us check these things in the website of the World Gold Council. Let us see the price changes for the last 3 years in the Gold World Council website. See, now in April 19, 2022, the price was US dollar 1964 per ounce. It is troy ounce. Actually, that price is given in international market in troy ounce. So it is 1964 US dollar per troy ounce. So 1 troy ounce is 31.1035 grams. So this price is given for 24 carat. Okay, 24 carat means 99.5% pure gold. Now in India, we say in 22 carat. 22 carat is actually 91.67% pure gold. So this price is given for 24 carat. Now for 31.1035 gram, this is to be converted per gram for 22 carat. Okay, like that we can calculate. Now this price, you see that how the price is changing. So when it comes today's price, April 16, 2025, the price is $3,322.90 per troy ounce. So this is for 24 carat. When you want to change it into 22 carat, you would multiply it with 0.916. You multiply that, then you will get the price for 22 carat in troy ounce. Then you divide it by 31.1035. You will get per gram price you will get, and that's for 22 carat. Now what you will do, this price you are getting, now you want to price for per sovereign, that means 8 grams. 8 grams you want to find it, you multiply it by 8, then you will get for 8 grams. Now in 8 grams in Kerala, the price, you know that it's around more than 70,000 it is. Now when you calculate this, you will get around 66,700 something you will get Okay, but there is a difference. Why the difference? Because this is the international price. With this, some prices are added. What are the prices added, that we will check how it is changing, why in the local market it is more. There are some reason for that. All these things we are going to check why it is coming like that. Actually, that this is purchased by banks and they have a commission, and again there is import duty, then excise duty, then again their their margin. So this price is actually the bullion price, it's a British bullion market price. Okay, so this price, when it comes to local market in India, then actually there will be some changes. Some prices are being added, around 3,000, 3,500 rupees will be added with that. And all this reason why it is changing, all the things we will check in the balance part of the video. Okay, our local prices depend upon the international prices. So let us see how internationally the price is changing. What are the factors influencing the international price? Let us see that first. The price determination of the international market is very complex. The price in London and New York markets are affecting the international prices. Let us see what are the factors that affect the international gold price. So, the crude oil price is having direct relationship with the price of the gold. As the crude oil price increases, the inflation increases. I mean, all commodities, the price will go up, because the transportation charge will increase, because of that inflation will increase. And as the inflation increases, what the central banks will do? Central bank will try to improve their gold deposit. So for that, they will start buying from the market. So when the central bank try to buy from the market gold, then what will happen? The gold price will increase naturally. That means that crude oil price has a direct relation with the price of the gold. Second thing, when the dollar strengthens, the price of gold will come down. Okay. Another reason for inflation can be that US is printing recklessly dollars. Since they are printing more dollar, the inflation will increase, and all the other countries will get affected. Their GDP growth is getting affected. So this also will increase the price of the gold. And third reason is that the reserves. Actually, there are a lot of treasury reserves are there in US of other countries. What happens, that US used it as a weapon against in Russia. Okay, so what happened in the Ukraine case? They have actually froze the security that is given the treasury funds, the treasury securities of the Russia. Same thing happened for Afghanistan also. So other countries are watching this. What they think, they also thinking that tomorrow this will happen to them also. So what they did, actually, they are actually investing more in gold rather than in US securities. So US treasury securities, if they invest more and tomorrow US wanted to control it, actually they can control. I mean, they can freeze it. When they freeze it, actually they will have a control over other countries. So this thing they don't want to happen. So they started buying more and more gold. This also caused the price to increase. Another reason can be the Chinese the real estate market. So Chinese real estate market started crashing because they started building more and more. They started investing more and more money, pumped more and more money into real estate, and the real estate prices crashed. So the same was the case for their stock market also. So they started investing more in gold. Again, in India and all, the seasonal demand is increasing. So because actually that may not depend upon the price, even the price is high. More the Diwali and other festivals, or maybe for marriages and all, actually people will start buying gold even the price is high. So the demand of India and China is very high. But that supply demand, the supply is very limited and demand is more. Naturally, the price of gold will increase. In the Indian households, around 21,000 metric ton of gold is there. So it is more than the gold available with the reserve banks or the central banks of US, Germany, Italy, France, and Russia put together. So such a huge quantity of gold is available in the Indian families. As far as gold is concerned, nobody can print it, nobody can manufacture it, so nobody can control it. Because of that, the country started investing in gold rather than in US treasury securities. So that gold price have a negative correlation with the stock market also. As the stock market increases, actually the gold price will come down, and the stock market crashes down, gold price will go up. When the when the inflation increases, all the central bank will start buying gold as a reserve, and this will increase the price of the gold. So the international price is affected by supply demand conditions, and the supply of gold, it is limited, and the cost of gold depends upon the mining cost and all. Okay, now if they want to get more gold, they have to go deeper, and the cost will increase. All these kind of problems are there. Then there is actually demand factor is there, and there are many kind of demands. There is institutional demand, just like we told that the central banks are increasing their gold reserves, and there's a this is institutional demand. Then there is investor demand also, and there may be when somebody want to invest in gold, and they will start buying gold as an investment. Then as per the seasonal changes and all that, that consumer demand will also increase. Then there is industrial demand. What is industrial demand? Actually, some industries are using gold as a raw material. For example, you just consider the case of IC chip industries, electronic chips and all that. There actually that gold is used as a conductor material for that. So this is one of the many examples. There are many industries that use actually gold as a raw material. Now let us see what are the prices that determine the prices in India. Now till now we were looking into the factors that determine the prices of many international market. Of course, there is such a geopolitical situation, then actually economic instability, all these kind of things are there. When the political conditions and is changing internationally, then there can be some kind of issues can be there. Now we know that the latest thing is actually the Trump effect and all. Okay, now there is a import taxes, that war is going on between some countries and all. So because of that also, that changes can come, inflation can come, maybe gold price will increase, and all these kind of things are happening. Okay, that is one thing. Then actually there is some kind of instability that will also affect the price of gold. So the global economic conditions and will affect the international gold rates and the global market trends. All this kind of conditions will affect the gold price. Now, as far as India is concerned, that once the price is fixed, now okay, the price is determined by many macro and microeconomic reasons and all, okay, and it is changing. Micro elements will decide the price ultimately. Once the price is determined, then there are some local conditions which will affect the price in India. So the main domestic demand will mainly depend on 2 3 factors. First thing is actually the currency exchange rate. Currency exchange will directly affect the Indian prices. Second thing is the import and excise duty, then the government policies. Okay, all these things will affect the Indian prices. So that Indian market price is decided by international market price. This is the baseline price. Then there is actually currency exchange rate. Then there is import and excess duties. Then local demand and supply, as I said, the seasonal demand and all these things also will get affected. Then actually the interest rate is there. As the interest rate goes high, what will happen? There will be the price of gold will come down, and interest rate is low. Price can go up. Then the economic indicators like GDP growth, okay, also will contribute the gold rate fluctuations and all. Then there is inflation rate. That's also there. Then geopolitical events and market sentiments. Okay, all this will affect the investment decisions of the consumers. Then the global economic stability is another factor which is looked into. And when as I said, then when the stock market crashes, then also the gold price will go up. The geopolitical events can significantly influence the fluctuations of the market, gold market. For example, wars or political unrest, then recession, then diplomatic conflicts, and etc. will affect the gold price very much. So those who invested in share, then they tend to invest in gold because of the political unrest and all, and this will cause a price hike. Okay. The global stability may cause decline. Global instability will cause a change in gold price. Then policies and sanctions imposed by powerful nations can disrupt the global trade, and this will influence the gold price. As I pointed out, the basic rate is fixed by the international conditions and all. Then when it comes into India, the banks are importing the gold to India, and bank will take a nominal nominal charge of 0.2% or something that will change. That will be added to this price. Then again there will be other mechanisms which will decide the final price of the gold. Okay, of course there will be import duty, and there will be excess duty, and it will be added, and there will be some margin will be added with the traders. That's also there. And of course, when it is coming to jewelry and all, there is a different case that I will explain later. But first, let us see how the price is fixed in India. As already pointed out, the international market, the weight is decided in troy ounce, that is around 31.1035 grams. So in India, it is in carats, 24 carat, that is 99.5% pure gold, 22 carat is 91.667% pure. So domestic demand is controlled by the festival seasons and marriage seasons and all. So when the crude oil price increases, naturally the gold price also will increase. Then when gold strengthens, actually the gold price will decrease. And gold price is influenced by inflation and GDP growth. Indian gold price is influenced by the Indian Bullion Jewelers Association (IBJ), and they are a key player in the day-to-day gold price fixing. So all big gold dealers are members of this association. So even though the local market is influenced by international prices, the IBJ has a major role in fixing the day-to-day gold price in India. All gold coming legally to India are imported by banks. So the banks once import the gold and they will distribute it to the bullion dealers, and they will charge a normal fee on this also. Then what IBJ will do, they will get a buy and sell quotes from 10 biggest gold dealers, and they will take the average of that. Then local taxes are added to that and they will fix the price. These dealers are coming to this buy and sell right by adding their profit margin and then their cost. Okay, then their actual cost, mean that will include the import duty, excess duty, all the things, and as I said, their nominal margin also will be added with that. Okay, then the price is fixed. Now that's how the price is fixed in India. So once the price is fixed, now we will see how the price is fixed with the jewelry. When we are going, now this is the price in India, I agree, but this is the daily price. When you're going to jewelry, you will not get gold for this price. Okay, they will add a number of things to this price. How they are adding this? So let us see how the jewelries or the the local market or the retailer will fix the price of the gold. As you can see here, the London bullion market is there. From there, that will be affected with the global market conditions. Then this is the crude oil price. Price will be affected. The crude oil price and the inflation will affect the gold prices, and the central banks actually that hedging of the gold. Okay, that also will affect the price of the gold. Then again, there is a supply demand condition of the gold internationally. Then again, global economy, then geopolitical level, everything will affect it. And once it is stabilized, then there will be a price will be reached. Okay, then final price, that is the international spot price. There is spot price and hedging prices. We are talking about the international spot price. Okay, and once the price is fixed, then the banks are importing. Then there is the domestic market, the price fixing is coming into picture. Then as I said, there is a bank transaction charges are there around 0.2%. Then there is exchange rate will be get affected with that. Then there is import duty. Then there is excess duty. Then there is actually local demands, that is seasonal demands and all. Then there is a bank interest rate is another factor. Then government policies. Then everything will influence the investment decisions and all, and consumer price also will get affected with that. So the gold is purchased by banks from international market, the London Bullion Market Association prices. They are purchasing it, and banks interest charges are added to that. Around 0.2% will be added. Then they will supply to bullion dealers, and they will add their cost and margin and everything to that. And Indian Bullion Jewelers Association (IBJA) get buy and sell gold from 10 biggest gold dealers and take that average of that. Then taxes are added to fix the price. That's how the price is fixed in India, as I already explained. But that is not the price what we get the gold for. So when we go to a jewelry, we are getting at a different price. Okay. So how the price is fixed by the jewelry? I mean the retailer, how they're fixing the price. Let us see how it is being fixed. Now there are two charges that are added to the price fixed by their association. Okay, So the cost of alloys and wastage of pure gold both are, and because actually they're getting 24 karat gold, and as such it can that cannot be used by, because it is a little flexible and all, so it has to be hardened. For that actually some alloys to be added to the 24 karat gold, then only that is workable. Okay, then naturally there will be some wastage and all will be there in that. So that wastage they have to take into account. Again, okay, if it is a diamond and all, then there will be some wastage in diamond and all. Then there is business overhead for them. So they have to give salary anyway. Then there is store maintenance charges, then branding, marketing charges, and all there. Then they will add their margin also. Then actually on the gold there is a GST of 3%, and on the making charges there will be 5% charges will be there. Then ultimately the price is reached. Okay, now it will be around 15 to 20% higher than the price fixed by the association. Okay, that's also there. So when you are going to buy some jewelry and all, you have to give that price, because the making charges and all is there, and that price is to be added with that. Then you will get the final price of that, around 15, as I said, around 15 to 20% higher charges related. So now you know how the price is reached, why the price is changing. Okay, now from the international market it is coming to India, and a lot of other local conditions are actually determining the final price. Then again the retail price is fixed by many other reasons and all, then like that the final price is reached. But whether gold is a good investment or not, this is one thing we want to discuss here. So as I told you that price is going up only, then even the reserve banks and all, they are considering gold as a safe haven and all for investment purpose and all. Okay, therefore if you see that for some last 3 4 years actually gold price is going up. So you consider all these factors and take a decision your own. For ultimately it is your money, you have to take the decision finally. So I can give only some guideline, these are the things, and I can show you the path and all, that you have to take a decision on that. And considering all the things, you take a decision whether to invest in gold or not. But it is not going to come down anyway. I don't think it will come down. Okay, then actually that I mean, but you consider all the factors, and we don't know what will happen tomorrow and all. And the gold price is going to stay high, and it is going to go up and up as I see it here. So you take a decision on your own, then whether to invest in gold and all, you take a decision. But go slow. Don't put all your money in gold and all, then don't cry later and all. That should not happen. Okay, because it will not happen. Even then, there may be everything. There may be a small chance for everything. Okay, therefore be very careful on that in your investment plan and all. Okay, thank you very much. Before going, you please subscribe to the channel so that you will get notification on similar videos and all. Okay, thank you.